If you want to make big gains in the stock market, you have to follow big money. I'm going to show you guys exactly how to do that in this video, how to make gains like the ones you see on screen right now with a simple strategy even beginners can use on options using unusualwhales.com. I've been working on this strategy for about 2 years now. It's a lot more refined, and I'll show you guys a recent example how to find the strategy and how to build a nightly watch list for yourself. So, what is fire fishing? Fire fishing is a beginner-friendly strategy that utilizes the hot chains and tickers page on unusualwhales.com. So let me show you guys how to find that. When you go to unusualwhales.com, you're going to get this landing page. If you use code REDHOT, you can sign up and get access to all these amazing features that the website offers. Go to this flow page at the top, right? At the left here, we have the navigation, and you go all the way down here to the left. It says hot chains and tickers with this fire emoji. Click that and it brings you to our holy grail, our hot chains and tickers, where our hot traders feel the most comfortable. All right, so what we're going to be looking for here is the beginning of the fire fishing strategy. I have a nice thread that I've posted on this, an updated thread. I'm going to link it in the description of this video so you guys can check it out. If you guys are less of a visual learner, you just need it in writing, or if you just want to, recap and look over it after, it'll be there for you guys. So the first step, we got that done. We got to hot chains and tickers. And the next step in the strategy is finding a ticker with 3 of the hottest chains. So by that, what I mean is you go over here on the left-hand side. These are all the tickers with the most call and put volume. But on the right, these are all the options chains. These are the specific chains with the most volume and open interest. It will tell you the bullish and bearish premium here as well. But the chains is what we're looking for, right? So we're looking for a ticker that has 3 of these. 3 of the hottest chains. Okay. Expiries must be within 14 days. So you want to have all 3 of these options chains here expiring within 14 days. All of them here say -1 day because I'm recording this on a Saturday, so they expired yesterday. So keep that in mind when I'm looking at this. But if we were looking at using the fire fishing strategy maybe on Thursday, we could have been looking at going for Tesla short, because Tesla had 3 of the hottest chains here, a 180 put, a 175 put, and a 167.50 put. And the third requirement out of this strategy is at least one of the chains has to be a strike that's out of the money. All right? So when we're looking at these strikes, we want to find something like Tesla here. When Tesla had that strike at 175 that was out of the money, 180 puts in the money, and we had a decidedly bearish leaning options chain. Okay, so that's the first step to identifying a potential fire fishing pick. The next thing we want to do is we look for out of money bull chains or out of money bear chains. So this could work either way. If you have 2 out of money bull chains and 1 in the money bull chain, that's going to be bullish. 2 out of money bear chains and 1 in the money bear chain, that's going to be bearish. All right. So it's going to show you that difference there and show you just exactly which way you're going to be leading. With these new features, Snorlax, the developer, added, you could get even better. You can click on that contract expiry. It brings up the contract flow with the ticker flow. You can click the candle of interest and it will take you to the time and the live flow feed that comes through. All right, so it'll show you exactly what time, what the transaction was, who purchased it, if it was at the bid, at the ask. All of that information is laid out there for you. Next thing to look for in fire fishing is the daily put to call ratio and the historical options volume line up with your bull or bear thesis. What do I mean by that? So if we're going over here to Tesla, like we were talking about these Tesla bearish chains, we click on Tesla and it'll bring up our overview. If we want to look at the put to call ratio and see if it lines up with our bull or bearish thesis, all we have to go down to is here, and we look at this put to call ratio. Yesterday, the put to call ratio was actually bullish. It was more calls than puts that came in, so it does not line up with our fire fishing strategy. That's one thing to note when you're going through this. The next thing would be, are contracts being bought at the bid or at the ask? Ask always shows urgency. It shows that they're willing to get in at a premium on the price. So if you want to follow a trade, or if you're looking at contracts getting bought at the ask that go with your bias, then that's probably a good sign. And if volume has been turning into open interest on the next day, that means people have been holding contracts. What do I mean by that? This is a huge thing to learn too when you're doing these options chains and learning how other traders are operating within the market, right? So when you click onto a specific contract, if you see what I did here, I just clicked one of these hot chains on Unusual Whales, click the date, and it'll bring up this page. Here it will have your put to call ratio for the day on Tesla, and on the left side here it will have the intraday contract volume. So you can see specifically what came in on this contract, which is key, right? So down here you have your historical volume and your open interest for Tesla 180 calls, 118. And here you can track exactly how much volume converted into open interest over the next day, meaning the volume is how many contracts were traded that day, and if they were held and turned into open interest overnight, that means that these traders had confidence that this was probably going to go in their direction, so they held overnight, right? So in this case, there was 5,700 open interest. The next day there was 4,700, so maybe they got less bullish. That would line up with our bear thesis. Here there was 8,000 contracts traded and 4,000 open interest, so a couple hundred. It'll tell you the difference in open interest over here, and it'll let you know exactly how much contracts are being held overnight and what the exact change was. Here, just lining up in this fourth column, that helps you line up to see if you're leaning in the right direction for your fire fishing. So to just recap everything I've gone through so far, what you want to do is go to the hot chains and tickers page. You hide index and ETF, so you just get a clean view of just the tickers. You can even filter out sectors and caps. This might be when you get a little bit more apt with the strategy, but for now you can just do the basics. You look in, you see what contract has or what chains have three, or what ticker has three of these chains. See, at least one of those contracts has to be out of the money. They have to expire within 2 weeks, and then you have a lead. And it's all about finding a lead here, right? You're trying to find out where big money's going and exactly how to find those plays that are going to explode before they even happen, right? You know, they always say if you see it in the news and you're too late. Well, usually if you see it in the flow, you're not too late. You can get in, and these guys are just getting in before the news. That's the great part about Unusual Whales, and the great part about using strategies like this that take advantage of monitoring options volume and open interest, because you get an overall view of what other traders are doing in the market, and that includes big money. All right, guys. So that's just a brief explanation of my fire fishing strategy and exactly what it was. And right now we're just going to go over a quick example from a recent fire fishing pick of mine that ended up actually going right. So Coin was a play that I picked out for Thursday. Crypto was entering the 7th circle of hell, and the most active chains met all the fire fishing prerequisites, meaning that they were going bearish, and all three of them were, and they were all expiring within 2 weeks. Below Friday's low, which was 46.25, I theorized that 45 puts looked good, and I can bring up the chart here, exactly what I was looking at. That was the bottom of the candle there on Friday. So for the 45 puts, they got loaded before close at the ask, and I could tell that by I was watching these chains, right? We looked through, we saw these chains fit the 50 put, the 45 put, the 37 put, 49, 48. It was overkill on the puts. And at the end of the day, you can see this 45 put that was getting a lot of the volume had a big spike here. This big spike here is people buying in with more premium. So this is more premium coming in, and it was ask volume highlighted in green. Whenever you see calls or puts being bought at the ask, you know that it's aggressive. These guys bought in around 75 cents, and they got loaded into right before the end of the day. Usually, if you can catch that before, then you can take a small put position, follow along with that flow, see what happens, and maybe somebody knew something. If not, you just caught that at the night before, then you can keep that in mind. You know what? Traders are decidedly bearish on this, and if I can get a pullback to maybe this 70-cent level on this contract, it might be worth it to go in. All right, so that's just a little recap of Coin And if you wanted to see what coin absolutely dumped out the next day, if you looked at for 1118. So crypto and all this stuff is pretty up in the air anyways, but yeah. All right, guys, that is the fire fishing strategy. I showed you guys an example, a recent example. I showed you guys exactly how to determine and find a fire fishing pick and add one to your watch list, and all the additional things to look for if you want to implement it in your trading day.